All right, so I guess we'll get started. Um, yeah, I was gonna stream today. Um, I was thinking about streaming today, but obviously with all the errors that we've been having recently, especially today, I decided to just hop on here and we'll look at some tape reading stuff. But realistically, shouldn't be too, nothing crazy. I already have the bias set in from start of the week. You already know I've been bearish this entire week, looking for low prices, and then going off the protocol. Um, kind of example there. Look, I said Monday through Wednesday, I'm preferring as high price, but preferring as high probability days, highest probability days, and the possibility of offering an OSAC this week. I cannot read. And then Wednesday, time for entry to be determined. Given the fact that we have no news, you can kind of trust that the macro times will be quite effective. Um, so yeah, it's just obviously frustrating stuff when you are unable to execute and operate off conditions that obviously are nice and follow a bias that are pretty clear. But like I said yesterday in that predictions chat post or the trading on post, whatever it was, there are things you control, there are things you cannot control. This is one of those things you simply have no grasp over. So although it's annoying and although it's frustrating, the worst thing you can do is let it affect your mental and let it change how you're going to trade. So especially after 2 days, the anticipation and tension grows. So as you walk in tomorrow, don't feel like the fact that you didn't get to trade Tuesday and Wednesday have any effect on your decision making on Thursday. Because I know in the past it has for me. It's a very easy thing to let happen is something happens either negatively or positively, or even in this case a neutral kind of event. Um, and that anticipation grows into the next day and the following days to the point where you're already expecting to trade without even looking at the price action coming into it, right? And not even identifying it's going to be high probability or low probability. So, what I want to do is obviously kind of just clear that up, but remind you that your mentality over these things is the most important aspect. So, we have sales liquidity pools all below us. If you go to the 1 hour chart here, you have sell side from relative equal lows here on the 15-minute chart, and then you have the previous daily low. We traded up into a premium balance here, and we have this daily gap that currently is acting as somewhat of resistance. So all those things I'm kind of just focusing on and watching. On the 5-minute chart, it's pretty clean. Got a nice 930 open drop, forming first presentation gaps on the way down. And I'm just looking to see if we can re-enter into a sell program and sell off towards the pools. Obviously, they've been looking for yesterday and today. So, kind of the same thing as yesterday, I guess. Yesterday, same exact thing. I wasn't planning on streaming yesterday, but booted up all the stuffs. Nothing could log in with my not evaluations, my funded live account. So, what can you do? I went skiing the entire rest of the day. So, just kind of took a day off. I'm not going to go skiing again today, but I guess we'll see if there's anything that's able to log in before 11 o'clock. Otherwise, we'll just be sitting in no man's land, I guess. But yeah, I've in terms of bias wise and everything considered, hasn't really changed much since Monday. Yesterday, I actually probably would have lost, all things considered. So I'm not too. I'm not. It's not the worst thing I guess in the world that everyone was logged out because you actually look back at this price action. It's absolutely disgusting. So this is December PA at its finest. But today would have been better. But who cares? Trades up again into the premium inefficiency here, holding it with the candle bodies. So you're looking for probably displacement and a breakaway gap to form through the 1002 open, taking it a gap that forms here. That'd be quite nice. So wow, it literally took him all day yesterday to fix it. Wow. Oh, also, actually, let me send this. I'm gonna send this link if you want to monitor their, what's it called, status. I just had that pulled up on my other screen, but it's not really. I don't expect it to get fixed realistically before 12. So, yeah, don't expect a trade today. But this is also a good reminder that live accounts are what you want to be working towards. So prop firms and everything are great and all, but this is obviously a threat. The outages that Amazon and everyone else had is a threat, and you also got to think about the future of prop firms. So I personally do not think that. I mean, I'm optimistic about them, but I also do not think that they're going to be here the way that they are right now 10 years down the line. There's probably going to be a bit more rules, if you will, surrounding them. So live accounts is obviously what you always are trying to work for. And you do not need a crazy amount of money to put into a live account to start it off. Even if you just put $10,000 in there to start it off, or even $5,000 if you wanted to. But any amount of money, above probably 5K or more is perfectly fine. Just really just depends on how much you want to scale it and how quickly you want to grow it. But I would say that probably the standard amount you want to try and put in there is anywhere from 10 to 25,000 when you first start off. All right, that's a very, very good amount, and you can easily grow that up to whatever amount you want, obviously, within a year. So let these things obviously serve as reminders, and do not let them affect you too much, although it may be frustrating. And you can kind of see here on the premium end of this, we're just staying right around the upper portion of the daily gap, and having some trouble to close through. You can see the closure there. We're at 50% of the daily gap, and we're currently just sticking right at the top end and hovering around this premium end. And also notice the lack of sibis that are forming. We have one down here, which once price closes through again, you'll see this uses reclaimed sibi. So short entries off of this gap actually wouldn't be too bad. Looking for something kind of like this. All right. So if you can get nice displacement and a proper changes to delivery, that'd be something of interest. But you're just trying to make sure that it can get through this daily gap. And each of these levels, if you grade it, you can look at the closures, kind of how they're happening throughout each of these little levels here. But normally a closure past one indicates the closure to the next. So that's a simple rule of thumb, but when you're looking at this, if it closes past this one, I can assume it's most likely going to at least approach this one, given all things considered with order flow, market structure. So, yeah, you're still waiting to see if you can run through this changes to delivery, hopefully form a breakaway gap. It's formed some up here, so I'm expecting this is 50% of the range, having this consolidation, kind of like in the MXM, when you have low risk sell, and the accumulation runs to stops, then you have one more sell opportunity. I think we're right in here based off at least the overall. Right, this market maker, this is the first lower sell. We got another tiny accumulation range in here, tiny accumulation or larger accumulation range in here. So should see one more sell-off opportunity within this range. Pretty clean 5-minute sibi or something. Sector asked a question: how would one trade and pay out with a live account like that if it's his main income and he needs to take payouts? Like, should one keep the account balance at a certain amount and take profits out, or grow the account? But then when and how much to take out? It's a good question. So, I mean, realistically, I would trade it the same way I would do with a funded account or, a live account from TopStep or live account from these other companies, which is, and I'll make a video on this. I've done it in the past with one-on-one members, kind of explaining what risk amounts you want to be using. But your goal is basically you want to be, paying yourself out in an amount that is less than the account growth, right? You always want the account to be growing steadily, and then you can take a payout, once a month if you want, or 2 times, or 2 times a month, once a week. That'll be up to you. But preferably that account balance, if you make 5,000 in there, I'm only taking out, 3,000, 2,000, or 4,000, at least less than that profit amount that I've made in there. Because of the fact that then that lets me scale my risk. And as soon as I can scale my risk constantly, that should help the account grow more and more and more. So realistically, obviously, you're always keeping a buffer in some sense, but paying yourself out in that case would just be based off of what you need at the current time. But then obviously after that, then you can start to look for more aggressive payouts, as it allows you to, as soon as your risk basically becomes your payout, that's very easy to do. So basically, as soon as you were to have a profitable day, in theory, that you could still take that out and it wouldn't affect how you were trading. Your risk is still going to be the same. Your drawdown is still basically the same. You're just taking yourself out, maybe a risk chunk, or, a payout amount, or a 2R from your risk. Once you get to that point, it's all very comfortable, and you don't really think about it that much. But up until that point, you kind of have to play a game where it's like, okay, how much do I want to take out relative to my account balance right now? And it's really just a numbers game you have to play. But like I said, I'll probably do a video on how to scale and how to manage risk in those kind of situations. But it's not anything too complicated. I think if you try and overcomplicate it too much and place too much stress on yourself in those situations, you end up performing bad. So as long as you remember, you just have to do 2 things, which is manage risk, take good trades. Eventually, all of it will kind of figure itself out. And the nice thing about live accounts as well is most of these prop firms don't have that anymore, but you don't have to cut your profits or anything, or make sure that you're not going over your limit. So live accounts, you can let runners actually go till close, and it's a lot easier because you don't feel like you have to. I mean, you can do that with express accounts and funded accounts as well. But, sometimes with evaluations and fundeds and whatnot, you develop these habits that normally aren't normal to regular trading, but some of the habits you do bring in are beneficial. So it's, and it's obviously prop firms are always free capital. So you're always going to want to use them. But as you transition to live account, those are the questions you have to be asking. So you can see price is just still staying within this range and failing to get below 25%. See all these candle closures here and failing to get through there. Right, all just staying there. Yeah, if you think about it, your risk basically has to look, or I guess your account balance has to look like this. You want your account balance obviously to be growing, right? And then you want your risk to preferably be growing like this. Okay, I don't want my risk to be equally growing with my account balance, because say then this distance here, this distance is equal to 10%, right? So if I'm risking 10% at the start of my account in here, if I lose whatever, you got to think about obviously what your equity curve would look like. But if I were to risk 10% here, let's say your account size is $10,000, that'd be $1,000 loss. Once your account is up here, that 10% risk is $10,000. So technically speaking, the higher amount there, 1,000 to 10,000, doesn't matter because it's the same percentage, right? Like mathematically speaking. But as I increase my account balance, and basically as I get longer and longer into the account, I don't want to have to be risking 10% constantly. That's just an aggressive way to get out of the start, right? You don't really want to be trading like that constantly because the amount of stress you're putting on yourself to get out of drawdown and stuff is just higher than it needs to be, you know? So you want to be decreasing the percentage of your account, of your risk per trade to get lower and lower and lower, whilst your account balance goes higher and higher and higher. So you want the line to more look like this. So as your account balance is exponentially increasing, your risk per trade is increasing at a negative amount relative to your total profit, right? But think about this, even if your risk is still increasing and your risk goes from 1,000 here to 2,000 here, 2R between these two, you got 2R is 2K winning trade. Over here, it is a 4K winning trade. And then obviously, what does that do? Okay, you now your 4K winning trade from 2R obviously makes this line, your account balance, grow faster and faster and faster. Then you go to 3K and that number goes faster and faster. But then this percentage, the 1K, 2K, should be decreasing. So instead of going from 10,000 to 1K, so that's 10%, you maybe go to 25,000 to 2K. So now it's slightly less than 10%, be 8%. And you constantly do that over and over and over again to where the point you're at 1% risk. And that's still going to be greater than your original starting risk size by tenfold or something. But obviously it's a lot easier than to, it's a whole game you have to play. And like I said, I'll do a whole video on it because it's harder to kind of describe in pictures, but it'll make sense. So macro time is finished. And if you see a consolidation like this, you're looking for major swing points formed throughout the macro time as references. So understanding the fact that if macro time in this case is going to offer a high quality entry or an entry at all, you're looking at where would that entry potentially be. And if we have one-sided directional bias for the rest of the session, that entry or that swing point should in fact be protected. So this to me right now is the most obvious one, which is the fact that it ran stops, and also it is being formed as an intermediate term high with these two relative swing points here, right? And the same exact thing could be said around this swing low. So these 2 points here would be our institutional reference points that you'd be looking for to kind of confirm your bias or to kind of grade how price action is printing. So in this case, it's leaving this intermediate term high as you'd want. And you obviously are now looking for a shift below here. But as long as it stays in this consolidation range, this is the point of reference that you'd want not to be broken. It's allowed to come up and sweep this stop. It's allowed to even come maybe if you want and sweep this stop. But obviously as it continues to hold bearish order blocks, as you see in here, you want those to continue to hold. But that's kind of the reference point during the macro time, that if the macro time is offering an entry, and especially if it's formed this intermediate term high, you do not want to see that macro entry time broken. Assuming that the rest of the session is one-sided directional price action towards 11 o'clock here and towards obviously the sell side down here and down here. So as it continues to drop through, I'm going to screenshot this. Watching the ITH to be kept intact and this reclaimed sibi to be offering short entries. So you can kind of loosely see how it's high resistance order blocks and retracements, because each of these retracements are coming all the way up. This one here coming all the way up to the last candle. This one coming all the way back up to this last candle, right? And there's no sibis forming, so that should be showing its high resistance. Also, look at all the stop runs that are occurring inter range. So now you're looking at this candle here, this 1013 and 1014 candle. Trades up into and approaches not really a high probability order block, so you really wouldn't study this too much as a propulsion block. But if the candle bodies start holding within the volume bounce, then you probably see it start to leave and aggressively get away from this FEG here. And then you'll see the shift and everything else kind of after that. So, and especially also in this case, I'm not going to drop to a 15-second chart inside of a consolidation like this because there's just too much data that is unneeded. And you're getting too many fake outs of when it's going to leave this consolidation. So the best thing you can do is either stay on the 1 minute or you go to the 5 minute. The 5 minute in this case is going to be a lot cleaner. The 3 minute as well. Just removing the amount of consolidation candles and wicks and whatnot makes it so you can get a very clean view of price and you're not swayed too much by other things. But look at how this candle just came up here, stabbed into this candle here, and is immediately reacting off of. We have about 3 minutes left on this 5 minute candle. On a 1 minute candle, you'd like to see it start to hold this swing high, this short-term swing high. As long as this candle closes bearishly, which it should, you don't want to see this swing high go. So you're watching to see now, is it entering into the sell program? Because on a 5 minute, it just reacted into a 5 minute bearish order block. It's obviously also now within the first presentation, or not first presentation, the reclaimed sibi here. So you're watching to see if 21 seconds left, if this candle can form this short-term swing high. It does. Like I said, you want to see displacement preferably out the bottom of the 10-12 candle, forming some sort of gap here. If you could reuse that gap with the sibi, that'd be a really good entry. But it may just kind of slowly climb through or not climb through at all, where you don't have any inefficiencies forming. So we're using this as a reference point in case it doesn't have that. Okay, look how it just formed the swing high and it runs it. So we still expect it to be in a consolidation now. I'm pulling this gap because in case the idea that you do not have any sibis forming in this kind of range, this one is still a sibi, obviously, because you kind of bring back the tape. This was an inefficiency, leaving all this balanced price range. We can still use that to frame our trade. But since it did not hold this 1 minute swing high inside the volume bounce, we're just assuming it's going to be stuck in this consolidation now for a little bit more. But obviously, as we approach 10:30, now you've got a little bit more weight towards price action and where it wants to go as it gets closer and closer to that time schedule. See what ES is doing. It's not ES. Oh, I actually got to fix all of these, don't I? Make sure to switch your contracts if you have not already. I'm sure you've heard it before, but make sure to do so. Whoops. Should be NQH 2026 and all the respective H 2026. That is your March expiration contract. So here's ES. It's not even a gap. You have the FPFEG, and that's about it. Do I use break even adjust? I don't believe so. Oh, okay. So break even adjust is on the continuous contract. I've always been programmed to just use the current contract. Because that's just what I was taught by ICT, so I don't have to worry about all those break even adjust. To be completely honest with you, I don't know what actually I know adjust for contract changes, but I don't know if you're supposed to have it on or off. I've seen different people use different things. I would realistically just go to an ICT video where he's doing a market review recently and just see when he pulls up the daily chart if he uses it or not. I've seen different times where I'm not sure if it's him, but other people are using obviously other things and different things where to me it's a whole lot of confusing stuff. So I just use the current contract, and that way also the volume imbalances and price discrepancies between the continuous contract and if there's any between the continuous and current, I don't have to worry about that either. So I just opt in, to use this. And also, if you're wondering how I switch my screen so fast here, I'm just clicking the down arrow and the up arrow. And it's associated to your watch list order So I normally keep NASDAQ in the middle, ES on top, and then YM in the bottom. So then when I'm cycling through, all I have to do is hit the up arrow to go up to ES, and I hit the down arrow to go to YM. So I can quickly cycle. That's why I keep NQ in the middle and not the top, so I can just quickly go like this. And then DXY would also be one more down. And then I think oil, yeah, and then Euro USD. Yes, nice. So there you go. Run up into the first presentation gap, running as pool of liquidity as well. So let's see now if we can finally leave this consolidation range. Also, is that short-term SMT? No. That's fine. No bids. Hello? Okay. Whatever. Yeah, you can click the spacebar, but I think that goes down, doesn't it? Yeah, it goes down. All right, so you're watching to see if this is going to be Fuse's bounce price range. Well, like I said, all the stuff about this FPFEG, not FPFEG, reclaimed sibi. I keep saying FPFEG. Oh, and I have to include the volume balance there. Okay, now, depending on how this candle closes, if it closes down, I'll switch to the 15-second chart and we'll look at that. So this is kind of like something in tape reading you want to be mindful of, which is as soon as we go from this consolidation range instantly to this quote unquote clean price action, you have to be not flipping instantaneously your expectations where you're expecting this to completely be used as a breakaway gap. You have to be watching to see does price action actually want to show you that it's flipping now from nasty price action to clean price action. You can't just assume as soon as you see gaps form or like breakaway gaps or balanced price ranges that you're going to get some sort of clean price action switch as soon as that starts. So I'm watching down the 15-second chart. Does it want to start holding this high, low, higher high that ran liquidity out? This is just a tiny breaker even within the range. So preferably any gap above that range. So obviously this one, you're looking to see, does it want to be used as a breakaway gap? And even this one up here, the upper portion, I wouldn't want to see filled. So you're studying now kind of this array of PD arrays, mostly focusing on any PD array stuck within this range on the right side of the chart here. So this inefficiency, obviously paired with the FPFEG. sibi, not FPFEG. Cannot speak today. Got some brain damage from skiing yesterday, apparently. Our watch, does it stay below CE of this? Tap into it, right? But it cannot go above CE. Taps into it, goes above CE. So now, go back to the 1 minute. And you're assuming it's still within this consolidation range. See, so that's the benefit of it, is obviously when you see something clean like that and you see ES come up and it looks nice, don't instantaneously then, as soon as this gaps or this run up into this gap or premium starts trading into there, that doesn't just mean short it because it's into premium. You got to do triple checks sometimes and double checks just to make sure, okay, it actually does want to enter into this sell program, especially when you're in a consolidation. So you are obviously keeping yourself safe from potential losing trades within a couple of minutes, so run, and you may get a worse entry. It's not going to be as high up, but in this case, like as you see here, you're avoiding a losing trade, which is just as important as sniping a good trade, right? Because you can have so many different entry opportunities within a range, but you have to be making sure that you're skipping on the bad opportunities. And just that kind of confidence you get from price action and that gauge you have of whether price action is clean or not, you need to make sure that you're operating in a very focused manner so you can determine whether or not it's a setup. So like I said, it's obviously as soon as you see this run up here, kind of separate these two chunks of price action. As soon as you see this run up here, it takes the buy stops and energetically runs away. In clean price action, where there's one-sided delivery like you saw last Friday or something, absolutely you can assume this is going to be balanced price range and you're going to see price action just trade within the bottom end, and you probably could short it right here. But especially like today, non-news, already kind of consolidating and showing you that it doesn't really want to go any lower, which it should, given the fact that it hasn't right now any time-based liquidity pool. Just something of interest, right? So on the 1 hour chart, it does go from 1 hour premium to 1 hour discount. But it's not time-based ERL. So that's the only thing I'm looking at. This is not a time-based ERL. This is not time-based ERL. Next closest one is the PM session low. And these relative lows right here. If you can see those. And then the previous daily low. So this one, and this one is what I'm looking for as targets, which are all lined up as shown. But this daily gap is currently causing us some struggles. So we'll watch to see. And also, this technically is an intermediate term high as well. So now you can see we're placing these lower and lower intermediate term highs. And notice how also this run up here did not take out the reference point we were talking about during the macro time. So it's continuously showing you, although very weak, showing you that it has a tendency that it still wants to be holding these macro time entries. So let's say you got in on the macro time, your entry would still be kind of left intact. And that's why, especially on these non-news days, if you have one-sided directional move, those macro times are very beneficial because price action will protect them. Look at this. That's a very good entry. What time do you think that's happening at? It's quite random, right? So each of these things are happening at key times first, and then they make references in price that you have to be studying. So in here, same exact kind of deal. Got this run up deep in a premium all the way to the last order block, as you see in the rejection block. And it's coming back down and gives you kind of these weak change in state deliveries. I don't really want to concern myself with those because they're not the kind of ones that initiate these nice sell programs. And therefore, your stop has to be way higher than you'd want. So I'm looking for price action to start actually properly entering that sell program. So giving me the SISD plus a sibi, holding the sibi, then SISD through the bottom of the sibi. Or bottom through the retracement. Like that's what I want. Because now I know that's multiple things in line with a proper sell program. And I can start to look for, high quality short entries off of that. So even in here, same exact thing. You have these change state delivery, and you have a breaker. Not a breaker, but a continuous order block that should be holding even a lower time frame. Kind of you see this as a breaker. And you want to see it as a form a gap here. All this liquidity building up, shift, all this stuff that I talk about. So you can see it comes all the way back down, runs at the sell side, and then it's coming back up into premium of that range. And not forming the imbalance. So now to get the imbalance, what you have to do is be here, right? Oh, anyone check top step yet? Oh, there you go. It's back. Nice. So there's your sibi starting to form as we were looking for it. So now you're looking for, here's the shift, but looking for a retracement into this sibi and into the lower portion of the reclaimed, this one, remember? And And then as it runs up into there, obviously look at the time of day, 10:34, and wow, magically it's going to start looking for the new low. I'm sure you get sick of me saying it. So really, I'm just studying this right here, okay? If it can run up into this arbitrary box, that's kind of what is constituting a short for me. But realistically, it's just the order block low end, the reclaimed sibi, and then the imbalance that's going to form right here on a 15-second chart, a 1-minute chart. You know? So, and if it doesn't, if it wants to just go 300 points, I guess it is what it is, but what can you do? Now remember, if in fact we are in a bearish weekly market environment, which I would assume we are, then Monday being the high of the week, Tuesday being the retracement-ish, Wednesday kind of continuing this move, what day should the low of the week form? Is it going to be Wednesday? Is it just going to stop here at PM session low and that be it? Most likely it's going to continue into Thursday, maybe into Friday. Probably not Friday, but you would assume Thursday and TGIF Friday. So us being on Wednesday, you would assume that at least it's not rational to see the current weekly low go and then some, right? Even further past that sell side. So you could use things like for projections there, they're not giving you -2, -2.5, -4, -4.5. You know, you could extend it even further out if you wanted to. It's all not too necessary. But when you're looking at grading targets, talking about how far can price go for your entry or for the session, those are the things you have to be considering, which is weekly profiling in this case is valid. And we talked about this on Monday. If that's kind of confusing, I would suggest go back to the weekly outlook stream that we did on Monday. That's posted up, right? I didn't forget. Yeah, posted up. And that kind of goes through why today's high probability and why the weekly profile is something to look at for this week. So also notice how that's a pull sell side, discount array, premium of the most recent child dealing range would be between here and here. So it doesn't need to get up into premium. I'm just saying this is the leg you'd be pulling. You could also pull it from this. That doesn't really matter either. But now you have imbalance and imbalance. I would have liked to see that, what I talked about before, that nice little entry in the FPFG. Kind of we saw Friday or something, but it doesn't look like it's going to give it to us. See, the problem is now if you get a SIST here, you still have to accommodate the premium imbalance or even this imbalance here. So if you get a SIST out the bottom, which you probably still will, your stop would have to still accommodate here up to basically this swing, not swing point, but the open of this candle in case you want to come up to this gap. Maybe not even premium, but so it's a little sketchy, and as it continues to drop towards the south side pools, it is what it is. I'm looking for, if it can give me one clean entry, at least on the 1 minute, that's what I'll take. I don't consider this to be super clean. It's not trading premium. There's no order block. There's no breaker. There's no run on stops. So this to be trusted as a sibi entry, and then to trust the SISD off of that, even on a lower time frame, it's pretty hard, at least for me to do, because if I'm taking that kind of entry, I want to have a tight stop, especially with how close these south side pools are, and given the time of day now, it is 10:30. We have to be careful with our selection of entries. So just because it gives you one and just because it's there, I still got to think about my risk, which has to still be a 2-to-1. So if my risk is going to be 70 points, then I can't really argue the trade. So there's these filters that you have to use, which sometimes are unfortunate, And it's only when you anticipate placing a trade like that that it becomes hard to fight against the urge. This one's a little bit better. Low end of the daily gap plus 1 minute order block and inefficiency. Into premium. See, like, look what I was talking about before with how the 5 minutes so clean. Like, it's still consolidating, but I think it's a lot easier to see when it's going to leave that consolidation range, number one. But then also number two is, you don't get confused by the fake leaves. So in a premium with that short-term dealing range, holding the low end of the daily gap. Man. $30 points. I don't know. I'm having a hard time pulling the trigger here. It's just very, very weak. That's pretty good though. See, like, so this is pretty good, but I'm just having a hard time. I mean, look at the 1 minute. I'm just having a hard time taking these expansion entries with no retracement or run-on stops. Like this one was in a premium, but of a premium of a 15-second dealing range. So it's just consecutively holding order blocks, so I don't know. Where is my previous daily low? 25,073. So you would need to see it drop aggressively through these sell side pools, which is this clump over here. It's a discount array, so and it's it may cause this premium retracement, but given the fact that we're holding even these 15-second micro order blocks like this, I would hope that it continues this expansion leg through the sell side and all the way down to the previous daily low. Time of day is obviously on sides here, and price action is clearly in a sell program. So we're watching to see, does it want to start to hold, continue its sell off? Looking good so far, but I'm too zoomed in here. So yeah, sometimes I find these to be the most challenging entries, which is expansion entries. You have price action already kind of doing what it needs to do up here in terms of retracement and stop hunts. And then as soon as it enters into this sell program, you just see every single up closing candle hold in its range. So here, doesn't even get to premium, just trades up. Then you have changes day delivery, trades at premium, holds that, comes back down. This would have been nice 1042 short entry with the propulsion block plus inefficiency there. Trades into that, sells off again, then even holds this order block here. So you just see how aggressive the sell off is happening. And this is a 15-second chart. So look at this is the 1 minute on the left. You can see that you basically are given 1, 2 little short entries off of gaps that aren't really necessarily in premium. This one is, barely, and then it's going to print basically 1 minute black candles all the way until it tags the previous daily low. So challenging to get into, and sometimes makes you break your rules if you're not patient enough to look for a high quality setup. But there's another little 15-second entry. So, like I said, the projections, wow, we are really, really zoomed in. Holy cow. I'm just doing some loose projections here. -4 would be down at 25 even. And then over here, what are we getting? 24, 8. The new week opening gap, damn. 4-hour chart here. We got a nice daily imbalance filled down to here. So you could use that as a target. You could use the sell side here as a target. I don't think we're going to get all the way down there today necessarily, but these are objectives. And I had that November 21st swing low as the objective for the week. So we'll see if we can get all the way down there. But I think for the 1-hour chart for now, I don't mind that sell side, to be honest. It's pretty low though. So I like the overlap of just these two -4s and then time. So obviously your last or your next time of day would be 12 noon to look for short entries. Not short entries, new low of the day. Wow. So sleep deprivation does to you. I'm not even sleep deprived, I'm just tired. So just waiting to see this previous daily low get ran out and preferably through it. Now, once it tags, you're probably going to see some sort of slight retracement off of it, given its time of day and a high probability sell side pool. They're probably going to see some sort of 1 minute retracement off of it. But in terms of low of day candidates, I don't think this is going to be it. I think it's going to continue further down. And then you're relying more on time than price, given the distance of those targets. I would say 12 becomes your first objective because you have this weekday session alignment. So you're looking for post noon, new daily low, and then after that, really anything is extra. I mean, even past this previous daily low, anything is extra. This should still be a target heavily. But talking about low of day candidates, you're looking for just loose objectives for runners. Back into those 1 minute premium gaps. Is it even premium? Let's see. Yes, slightly into premium there on a 1 minute inefficiency. And once it makes this on a 15-second chart as an intermediate term high, you're going to assume there's going to be no more retracements after that. It's just going to run all the way down to the 25,073 level. And there's your short-term change of state delivery. And if it can make this little run up this little candle here as its intermediate term high, that'd be great. We are approaching 1050 macro, or we're in it right now, so we'll have to see, but we should be okay. There you go. So there's your intermediate term high being placed in. It's running up into a gap on a 1 minute chart, so it looks a little funky, but it's a 1 minute chart imbalance with a short term high after it. So that's what you're kind of looking for. Say the levies at the gap. Oh, 1, 2, 3, 4, 5, 4. Please, baby. Another sibi there. You can kind of just tell every single sell side imbalance is just kind of holding at this point, and then you have another change of state delivery through here. So you should see it just continue to rip now at this point and run for its 25.073 level, and really should not close anywhere past this range of price action in here. Right, this is a short-term market maker saw model offering a short entry during a key time towards an objective. So if this is in fact a short entry being used institutionally, it's going to want to keep that swing high intact, just like how we talked about the intermediate term high being placed in during the macro time. And the 1 minute order block in that case then would hold pretty well. So here should be your drop, and it's going to spool down all the way to the sell side in a couple of candles. You really should not get back above into mean threshold of that order block there. Here's your spool, here's your spool, here's your spool. It comes all the way down, takes out the sell side. And then runners are left for, what do we say, 25 even? And noon, of course. And there you go. Sell side bagged and tagged. Yeah, 25 even, and all the extensions down over here is 25. 25 even should be fine. Then after that, you have the sell side all the way at 24, 847. And the reason that I'm not using the gap here to target is because, number one, we just came from a premium inefficiency IRL. So I want to be looking for ERL, especially to target for low of day. That's what I would favor. And the second part is the fact that these gaps, since this is a new contract, the data from these old price action pools, as you see, even up to just December like 10th, is very funky. There's a lot of these volume imbalances, liquidity voids that wouldn't be here otherwise if we're using the continuous contract. So for me to say, okay, let's target here, extend this out and take a partial off at 25.40 or whatever, I think it's perfectly fine. But, well, like I said, when we're talking about levels to target for the daily expansion, those are things that would be of consideration, which is like a time number one. So right now, obviously, you see the session very cleanly has formed its range of price action. Opening range being the high, 10:30 to 11 forming the low, almost like it's magic. I don't know how realistically anyone can look at this and say, oh yeah, it's all buying and selling pressure. Also, I saw a comment about the 24-hour trading thing. Do not worry about that, because that is for the NYSE, the New York Stock Exchange, and for NASDAQ, it is not for CME. Okay, at least to my understanding. So CME is its own organization, if you will, that controls the delivery of price action for future contracts like these. Also, what they have that's setting up, it's implemented into these markets is not going to go anywhere. So it doesn't matter if the presence of AI is anything or if that threatens it, this is not going to change, you know. So you're in good hands, and the algorithm is here to stay, if you will. So these 24-hour changes and things of that nature shouldn't really affect much. And to be honest, you see things like crypto is also 24 hours, and most of that dealing range and liquidity stuff is all kind of dealt with um, still throughout Monday through Friday. You know, you're not seeing crazy price action moves typically in Bitcoin um, Saturday, Sunday relative to the days of the week, unless there's some crazy news that happens. But I don't really keep track too much of it. So yeah, 12 o'clock would be the next time of day that you're looking for the new low to form, and you pair that with an hourly, preferably sell side pool. I'm going to draw out this as reference. So this would be kind of a best case scenario in terms of low of day. I'm going to still be partaking a partial around 25 even, and then I'll leave maybe an extra one for all the way down here, 24,847.75. What the hell? I have 24 East. Yeah, there you go. Might buy. Whoa. There we go. All right. So I'm going to just leave the runners there. If you're curious about the execution I took, I'll show you once these things are filled out completely. So I'll send it later today. But basically, same exact logic I was outlining in the stream, which is using these short entries as it's in an expansion program, using the order blocks here, pretty high quality short entry, and then runs up into the order block again. That's a short entry. So I utilize this one in here. And then pyramiding, obviously, as it gives every single short entry after that on a lower time frame to get in, taking heavy partials off the 25, the sell side from previous day to the low, leaving partials for 25 even, and then leaving partials all the way down for the 24,848.5 level to squeeze anything extra out, you know? And then obviously leaving it for time of day. So let me set my alarm on my phone. TP2, where is it? Take profit 2. So if that doesn't fill out, obviously by then, and I get an alarm on my phone, pull up the chart, move the contract to the new daily low formed before 12, and then you close it out as soon as it hits that new daily low. It's a pretty good exit technique as well. So anyways, you see it's kind of continuous spool, and this is why understanding ranges and understanding how targets are used for daily and session alignment, you're not just going to see that sell side go, right? You're not going to just see this take profit go. You're going to look for this and beyond it and after it. And understanding that makes it so taking a short entry here, you know, or here isn't as scary. All right, you're relying on a combination of time first, then price, and grading specific targets, right? Not every single sell side pool is just a target, you know, or DOL. You know, I see some, especially new people, who mark out a specific line of liquidity. And they say, okay, that's my draw on liquidity. And then as soon as it hits that DOL, they don't know what to do after that, because it's like, okay, it finished what I thought I was going to do. I don't know what, should I flip bias? Should I continue to buy it past now my, you know, my bias of liquidity or whatever? You need to understand that daily targets and session targets and weekly targets all have very objective rules that they follow. If that sell side or if that gap does not follow those rules or is not, you know, aligned with multiple different things, then it cannot be used as the daily low, or it cannot be used as a session low. Meaning, if there's still more room for price action to go on a session basis or on a daily basis, or preferably both, then you can hold runners. You can take shorts that are maybe further in discount or further in premium that maybe you would want. And you can build trades off of those ideas rather than just, here's a line, an arbitrary line towards my bias. You know, I'm bearish for the day. Here's the sell side pool. Let me see if I can get a short towards that sell side. You don't really know then where you are in terms of the dealing range. You don't know where you are in terms of the market maker model. You're just taking a trade towards a line, it's going to be very hard to do, consistently, I guess. And consistently, you're going to find that as it continues to go past those levels, you're left without a trade. So, even from here to here, it's still offering you short entries, and being able to see that, I think, is beneficial, because like in this case, it's still 3R without partials. With partials, is going to be probably around a 4 or a 5R. So you can see even just by, just a tiny trade from here to here, although maybe it's not not getting from here all the way down. I missed 350 points, Flux. What the heck is wrong with you? You say you can miss all these trades. That's fine. I don't need all of that. I'm just looking for my 2R and I'm out. I can go enjoy my day, but as you can see, the concepts of this macro time entry being used and all the stuff we were talking about, consolidation ranges and leaving it. Still, I wish, could have, should have, would have, hindsight bias, that we got something up here. And even on a 15-second chart, I don't think, look, it's just very loosely holding that breaker, and there's no sibi in here or short-term swing high that was ran out. So that would have been the entry I would have taken, just very similar to the last Friday trade we took. So if you want to go back and kind of do a market review on that last Friday price action, it looks very similar to this setup we got, except it was the FPFEG. So that would have been the short entry I would have taken. Should have, could have, would have, hindsight, like I said. Otherwise, this is the one that I would have taken before my short entry. So when I go back into my review for the day, I think CISD threw out the bottom of here, or even the short entry about 15 seconds earlier than when I took it, would have been within rule set of, this is probably the earliest my rules were in place in terms of what I was looking for a sell program. This is now all just kind of consequent entries after, to kind of give, entries, like I said, towards the draw on liquidity, even because the time of day and deal well have not been met. So, yeah, I think obviously as the 1050 macro sits right around that previous daily low, you still could potentially see a premium retracement, and that premium retracement could also be all the way up to here. It's because you got to think about what the 5-minute looks like going into here. So the 5-minute, you have this large daily range with a bunch of sibis forming, even the 15-minute chart, large imbalance after it takes out that daily pool. So if you're looking at it from 15-minute perspective, it wouldn't be crazy to say price trades up into here, comes back down, right? That's not too crazy. So just watch this macro time. I'm not expecting it to be used as a continuation, but really your main focus then becomes fib projection targets, then the sell side all the way at 24,847, and then the noon time of day to make the new daily low. All right. So this is all recorded. I hope that it kept you entertained, at least while the charts were offline. Be safe. And like I said, as these things happen, they have the possibility of affecting your mental. Do not let them affect your mental. If you start thinking, oh, I'm going to get back at top step, that's to be honest, is a very childish thing to say. But, if you feel like your anticipation of trading is growing to where as soon as it opens back up, or as soon as it starts being proper, or as soon as it hits tomorrow or something, you already feel like you want to take a trade, it's probably telling you you're not in the right mindset, So just food for thought. I'll post this market review, the tape reading stream up later today, and we will do a market review later, kind of covering today's price action. And then obviously, got any questions, you send them to me. I got to go through those. I got 1, 2, 3, 4, 5, 6, 7, 8 more DMs to go through. Same old stuff. And then tomorrow we're going to plan on a 9:30 open market stream all the way up until probably this time or slightly earlier. All right. So if we get a nice short entry tomorrow based off CPI and 9:30 open, try and take maybe a nice turtle soup or something off open, and then we'll see where it goes. All right. So journal, obviously, do not forget to do that. Take care of yourself. Make sure all of your orders are flattened and things are technically sound. Lord willing, I'll see you tomorrow morning for the tape reading stream. Otherwise, maybe tonight for the market review. Like I said, got any questions, reach out to me, and I will talk to you guys very, very soon. Peace.